One Love user Baga Baka. Okay, cool name. Jerry, Jill, George, Iveth. Interesting name. Full Throttle, Sem, Jams, New York, Ping, Sean. Cool. Lindarella, how are you today? Ian and Olivia. Please, let's get the ball rolling. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader. Emir, how are you today? Brought to you by the 10-Minute Trader, where I invest in dividend stocks, take you along for the ride for a safe, predictable, simple, and predictable 1% per week. That's what I'm looking for. I don't want things complicated. I like things simple. I like things easy, and I like things quick. Okay, I don't want to be on the computer all day. I want to be on 5, 10, 15 minutes, be done and over with. Okay, I want to pick the stocks that I like, make my little profits, move on to the next week. Thank you very much. TikTok, how are you today? Simple, yes, exactly, simple. So, what actually happened today? I'm kind of curious. I jumped in this morning. I haven't even looked. This is the first time I'm looking at anything since this morning. So let's see what it looks like. Thanks. Great, thanks. Alrighty. Foot Locker. What did Foot Locker do today? I'm kind of curious. FL. Okay, because I actually have some Foot Locker, and I'm kind of curious. Where did it end up? Eddie, how are you today? All right, so let's take a look. Last couple of days, let's look at the last 30 days. Last 30 days always gives me a good idea of what we're looking at. All right, so here's Foot Locker for the last 30 days. Okay. 30 days ago was the 30-day high. 2 days later, there's the bottom. And it's doing nothing but the last 3 weeks. Look at it going sideways. This is what they call range trading, because it's staying between a certain range. So it doesn't go down here and it doesn't go up there. It just stays right along here. It's trading in a range. Okay, it's actually that simple. Okay, I say this many times. You're gonna hear me saying things over and over and over again. Like, adults have a tendency to make it more complicated than it needs to be. I created it for my 9-year-old daughter. The trading strategy, simple, safe, predictable. TikTok is addicting. Yes, it is. Damn, I need to learn more of this strategy. Well, cool beans. All right, then here we go. So, do I like it? Well, yeah, I like Foot Locker. I know who they are. I know what they do. Okay, right here. Now, you see my position is down here. I got Foot Locker at 22.84. Well, that's right about here. Not that far away. I like your vibe. Meow. Thank you. What an interesting name. Joey, what's happening? Chano, Tammy, Sean Zink. I wonder if you're related to Maria and Joanna Zink. That would be freaking cool. I went to school with those two, Maria Zink and Joanna Zink. Anyway, greetings from Arizona. Arizona. They have a song about Arizona. I can't quite remember all the words, but it is. All right, anyway. So Foot Locker, yeah, we're a little bit down today. Not a big deal. I jumped in at 22.84. Here's where we are. I already moved my option trade into next week, so I don't have to worry too much about it this week. But currently, if I wanted to jump in, 21.92, well, the closest strike price is going to be the 22. And it's going from 0 cents to 45. And that is within the 1% time frames that we're looking at. Well, I like 1% every week. Because think about it, 1% every week is over 52% per year. Uncle T, how are you today? Disturbing question, but okay. Ella, how are you, Miss Ella? Arthur, Robert, Gary, Alice, howdy, Heidi, howdy. All right, so anyway, that's Foot Locker. Yeah, I like Foot Locker. I'm kind of curious about Walgreens. What did they do? What did Kohl's do? What did U.S. Steel do? Well, let's find out. Walgreens, WBA. WBA just a little bit sideways today. A higher high and a higher low. What the hell does that mean? It means who knows? But think about it. Okay, my main objective, pick a company that I like. Make sure I'm buying it at the right time. Make sure the numbers are working. And what do I mean by the numbers? Well, what I'm buying it for, what is the closest strike price? Because if I'm going to do a trading strategy, a simple one, Big lots. Now, big lots, they no, they don't really work. Haven't been around long enough. Not enough dividends, whatever the story is. But I don't think I've ever looked at big lots. I may have looked at it once or twice in the last 15 years, but it is what it is. Okay, so what am I buying it for? Imagine that. Oh, got a question over here. Uncle T, you're an all right fella, Jim. I like it. Yeah. Thanks, there, Uncle T. All right. Big Lots filed bankruptcy. Thank you, Richard. That's probably why they're not on my list. Yeah, they're going out of business. Okay. Some of the comments. Okay. Some of the comments are going to be for yourself. Blah blah blah. All right. So back to what I was saying. What am I buying it for? First of all, number one, do I like the company? Before I even look at the numbers and even look at the chart, you should have some kind of a mental note just by the mention of the name. Home Depot. Well, you probably have an idea in your head. Lowe's, you probably have an idea in your head. What do you think about it? Mary Kay, well, guy's gonna think one thing, girl's gonna think another. New Skin, that is on the list. Okay? Certain companies, it's like you just say the name and then you think something. Do I know who they are? Great. Is that something I think I could like? Well, Foot Locker, I know who. Oh, wait, sorry. We were on Foot Locker. We're now on Walgreens. Okay, that's what happens when you get older. You have a tendency to forget things. Anyway, Walgreens. 925. Okay, I know who Walgreens is. There's a Walgreens in almost every major town. All right, TikTok is addicting. ET, Energy Transfer. Now, I looked at Energy Transfer a few times, and here's the thing I don't like about Energy Transfer. When you're doing options, you'll notice at the money, which is where this purple line and the black line meet, okay? Okay, here in the money, down here is out of the money. Okay, at the line, that's at the money. Anyway, what I found with Energy Transfer, as the stock price goes down and goes away from your price that you paid for it, the premiums become worthless. Because look, at the money right here, $9, it's 20 cents. Well, good, that's a nice number. $9.50. Well, it's 3 cents. Well, look at the next one, zero. Look at the next one, zero. Look at the next one, zero. So if the stock goes down, what am I bringing in every week? Well, if the number's going the wrong direction and I don't bring in anything, I don't like it. Why do people say not to do options? All right, the reason why people say don't do options is number one, when you're investing, most people invest for yearly gains, decades, 5 years, 10 years, 20 years, 30 years. Okay, I was talking to one guy, he said he bought these stocks 35 years ago. I'm thinking to myself, holy shit, 35 years. Longest I've ever held is 9 months. So Alice, the reason why people say don't do options is if you do not have the time to invest into watching them, understanding them, and then coming up with a trading strategy that is solid and simple and easy to follow. Okay, it all comes down to you. If you are going to buy an option or sell an option, know what you're doing. It's like with anything. It's like riding a bike or driving a car is dangerous if you don't know what you're doing. Okay, if you're looking at options every day and if you're doing this on a daily basis, eventually you're going to learn something. Here's an idea. Let's say, hypothetically speaking, I go to a convention thinking I'm going to, let's call it a stock trading convention. And I end up at an ice cream convention and everything's already paid for, so I'm there, I might as well stay. By the time I leave, I will know more about ice cream than when I got there. So once you what am I saying? Once you surround yourself with people that are talking the same language, using the same terminology, having the same types of goals in mind, you're going to start picking up information. And as you pick it up, you get better and better at it. And the better you get at it, you're no longer a novice. You're no longer scared of it. It's no longer risky. Okay? I do it every day. So options to me are not a risk. But when I first started, I stayed away from weekly options because I was looking for monthly cash flow. Because I made the transition, and it took me a long time, going from annualized, okay, hey, let's do this. What are we going to make for the year? And then you got to do 12 months of your life just to figure out what you made for one return for the year. Yeah, it took me a big It was a big leap getting from annual returns to monthly returns. And that was a game changer. You know, going from 3 to 5% per year to go to 3 to 5% per month. I was like, holy shit, that's awesome. So then the next leap is going from monthly to weekly. I stayed away from weekly options because there wasn't enough time then. Well, the longer I was in it, it's like, I can't wait this. I can't wait for 1 month to get to the next. What else we have? Weeklies. Well, let's try them out. Well, if I buy them on a Monday and they go down to nothing on a Friday, why not sell them? Because if 80% of all options expire worthless, why not be the guy that sells them rather than the person that buys them? Because I used to buy a lot of options and I made money on a lot and I lost the money on a lot. Okay, so it all depends on where is your little corner of the world. Well, this is my little corner of the world. It's not glamorous. There's no spotlights. There's no TV crews. But hey, I make 1% every week. That's okay for me. Eventually, you're going to learn what you want to learn here, and then you're going to move on. I'll still be here because I'm perfectly okay with 50% per year on my returns. I get some big plans that are going to be interesting. Let's see how they work out this year. So yeah, people stay away from options because they don't understand them. That's like I stay away from open heart surgery because I'm not that good at it yet. Okay, how would you like to be my practice dummy? Nobody wants to be that, you know what I mean? So the more you do them, the more you expose yourself to them, the better you get at it. And Alice, that is the main reason I tell everybody, get yourself a practice trading account. Trade with some paper money. Play like Monopoly with the stock market. You like something, throw some paper money at it. If it works, great. You may not have made any money out of it, but you gained experience. You gained, it's not that difficult. Because it's not. I'll give you an example. Walgreens, I know who they are. Okay? There's a Walgreens in almost every major city in the United States. So if I want to buy Walgreens, well, right now it's at $9.25. So if I buy it at $9.25, what are my options? What can I do with it? Well, I can just hold it and look at it, pet it like a little pet, or I could use a weekly or a monthly option to bring in some extra cash flow. Because at this moment in time, if you're just buying the stock, it would depend, is it a dividend paying stock or is it a capital appreciation stock? Because there are two. They're two totally different. One's going this direction and one's going that direction. Okay, the hardest thing to do is for you to make up your mind which direction you want to go. So here's the thing. Do you want cash flow like me? Or do you want capital appreciation? What do I mean? You want to put your stock, you want to buy a stock here and watch it go higher and higher and higher. Okay, that's the first choice you got to make. Is that what you're looking for? If you're looking for capital appreciation, go higher and higher and higher. You're in the wrong place. That's not what I'm looking for. I'm looking for safe, predictable, consistent, weekly cash flow. Now, you can't really do that with a stock that is specifically designed for capital appreciation. No. I'm looking for those that pay a profit. They take the profits and they give it back to me and to you. Okay, those are dividend stocks. Now, we looked the other day, there's 9,848 different companies. Half of them share their profits with dividends. The other half take all the profits, throw it back into the company for capital appreciation. The only thing I don't like about capital appreciation, you put your money here and then you just watch it. And you watch it, and then you watch it, and eventually you'll say, you know what? I need my money, let me cash out. Okay, there's no destination, it just keeps on going. Okay, so that being said, as it slowly progresses forward, okay, I'm looking for cash flow. I'm not looking for capital appreciation. Simple, safe, predictable, consistent. Everybody is in a certain phase in life. Okay, adolescent, when you're a little kid, you're an adolescent. Okay, you slowly go in that way. Then when you're in grade school, well, then you start learning. And then when you're a young adult, teenage years, in your junior high school and high school, well, then you're a little bit different. Different things mean something different. And then as you keep progressing, you slowly move up. Yeah, all right, Bulldog. We'll get that in a second because we got some new people here on the other channels. Okay. So as you figure out where you want to be, options really are not that complicated. You just got to decide where am I? Where do I want to go? It's a tool. It helps get from here to there. Does it fit into your repertoire? Does it fit into your trading? Does it fit into your goals? Either it does or it doesn't. Okay? But a stock option gives you a lot of different opportunities to make a consistent, predictable weekly cash flow. And that's what I'm looking for. All right, the kernel. Is this about stock option trading or dividend investing? Well, Colonel, it's kind of like both. I use dividend stocks to isolate which companies that I like. Now, I only like companies that have consistently increased their dividends for more than 2 decades. Okay, because a dividend is more or less the profits that the company shares. And if they're going to share profits with me, I want to make sure they're consistently growing. So if I'm putting my money into a company, I want to make sure that who's ever running the company is consistently profitable year after year after year. Okay, now I like 20 years, that's 2 decades. All right, so you get the dividend kings, that's 50 years of continuous profits. You get the dividend aristocrats, 25 years of consistent dividend increases or consistent profits. The dividend champions, the dividend contenders. And then for the fun of it, we'll just peek over Warren Buffett's shoulder and trade what he's trading. Okay, that's about 300 companies I look at. It's the same companies over and over and over again. All right, so let's see what other kind of questions we have. La, 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 la. What about ET? We already talked about energy transfer. The one thing I don't like about energy transfer is the option premiums. They disappear after 2 or 3 strikes. Okay, what do I mean? Well, currently this one's at 9.21, so the closest strike price is going to be the 9. Here it is. The next one's the 9.50. Okay, so the 9 I'm getting 20 cents. The 9.50 I'm getting 3. And then the 10 I'm getting 0. It just disappears. Energy transfer does the same thing. 2 or 3 strikes out, and then you have no money at all. Humphrey, have you been FINRA licensed at any point in time? You mean the question you really want to ask is, did I pay somebody to look over my shoulder to know how I add and subtract and how to say, oh, here's the high. Oh, wait a second, here's the low. No, I'm not giving financial advice. I'm not investing for anybody. I'm just sharing my opinions. And as far as I know, Humphrey, I don't need a license to share my opinions. I do need a license, however, to give people advice, which I am not doing. I'm just sharing my opinions, and that's it. Okay. So that's Walgreens. Let's keep on moving. So hopefully that answered your question. Alice, I'm trying to learn your strategy, but worried I don't know enough yet. Now, Alice, I'm going to have a little bit of a disagreement here with you because I'm making a couple assumptions here. Number one, assumption, you either have a cell phone in your hand or you have a computer that you're sitting at interacting with me. And you either live in a place that has electricity and hopefully air conditioning or heating. So these are just a few assumptions I'm making because number one, you're here. You can't be here unless you have a phone or some type of access. So, you know what the electric company is. You've heard of electric company. You know what a phone company is. You've heard of those. You've heard of phone service. You've heard of that. Certain things I'm going to assume you already know. Like you already know there's car companies. Ford, General Motors, Chevy. And I'm pretty sure you've heard of IBM, Walgreens, Kohl's, Macy's, certain things like these are just wild assumptions. Now, by knowing those things, okay, you've heard of Macy's. Macy's has Macy's Day Parade, has Macy's New Year Days Parade, Macy's Valentine's Day Parade, Macy's Thanksgiving Parade, Macy's Christmas Parade. I'm sure you've heard of them. So you do know something. It's just how do you take what you know and what you don't know and bring them together? Okay, it's really not that difficult. Okay. OC Pet Doctor wants to take a look at ARCC. Well, that's a quick look, and it's going to be a no. And I'll tell you why it's going to be a no. This is what you call a monthly option. And the reason you can tell is 17 January, 21 February, 21 March, 20 June, 16 January. It's like they're all months. Now, if it was a weekly optionable stock, you would see something like this: 3 January, 10 January, 17 January, 24 January, every week. So the difference between a monthly and a weekly, well, other than the simplicity of it, there's only 12 months in a year, and there's 52 weeks in a year. If you looked at it this way, Pet Doc, okay? If I can average 1 to 2% for each option trade that I do safely, right? 52 is 52% a year on the weeklies. Now, if I do the monthlies, there's only 12. So if I'm making 1%, well, that's only 12% doing a monthly. So ask yourself the question, is 12 better than 52? I don't think so. That's what, and another reason why I don't like the monthlies, right? There you go. Okay, so let's move this over a little bit. Another reason I don't like the monthlies, you can only do it once a month, okay? This right here is a 1 month chart. 1-2, which is January 2nd, December 2, all the way out here in December. Look at the movement, up, down, up, down, up, down, up. Great, wonderful. Now tell me, where's it going to be in 30 days? Because this is 30 days. Look at the movement. Trying to figure out where it's going to be in 5 days, well, that's pretty easy. Look, up, down, up, down, up, down. Now it's going up. Well, that's pretty easy to figure out. Okay, I only got 3 or 4 days to figure out where's it going to be by Friday. Well, it looks as if it should be going up. Where's it going to be in 30 days? Huge difference. This is another reason why I don't like monthlies. Trying to figure out where it's going to be next, not that easy. But 5 days, yeah, I can figure that out. It's not that difficult. 30 days, a little bit more complicated. So sorry, Doc, I don't like ARCC. I don't do monthlies. The numbers just don't work. They're nothing but a pain in my butt. Okay? I started doing options last May. It took me a while to figure out the basics. Well, alrighty then. Jose, I literally just got through that jump this past year. Greatest year yet. Well, alrighty then. Pet Doc wants to take a look at ENB. Now, ENB sticks out in my mind for a reason, and I don't think I've Enbridge. That's the name of it, Enbridge. I don't think I've ever invested in it. ENB. Enbridge. And that's why. Okay, I know it stuck out for a reason because people have been asking about it. It's a monthly. So need I say it again? I don't do monthlies. The numbers just don't work. Okay. TD Soyeti. Okay. Nvidia NYDY. Yeah, no. That's just no. Seriously. Now, I'm a little concerned with people that keep pushing the Nvidia thing. The reason being, Nvidia, let's do it. NYDY. NYDY. There isn't anything for NYDY. Okay, look. NYDY, we can't find that symbol. Okay, you're probably thinking of Nvidia, but the kernel. So how do you get 1% a week? Ooh, glad you asked that question. Yeah, Bulldog, I know that one. NVDA. Nvidia. I don't trade it, and here's the reason why I don't trade it. Simple. Now, it does have weekly options, right? And it does have dividends. But you know what Nvidia is missing? You know it. Right over here. Finster 11. 1 cent dividend. You're going to pay $138 per share. And they're sharing their profits of 1 penny per share. You have any idea what the rate of return of that is? Other than the words of astronomically terrible, what can you come up with? Okay, so that's not the only bad thing about Nvidia, in my humble opinion. The second thing I dislike about Nvidia is $138 is the stock price. The book value, if you don't know what the book value is, look it up in the dictionary. If the company was ordered to liquidate and pay off all their debts, guess what you would get for your $138 stock? You would get $1.74. That is all the company's worth. It's called book value. That means they take an accountant, walk through the building, walk through the business. They count the paper clips, the pencils, the erasers, the desk chairs, the broken computers in the dumpster. They count all that shit. Everything the company owns, everything the company owes. They shuffle them up together. Everybody gets paid. Guess what you get as an investor? $1.74. That's the book value of Nvidia. Let's not forget the one penny dividend. Yeah, no. So certain companies I look at certain things. Just because it has weekly options, okay, doesn't mean I'm gonna like it. All right. So Colonel wants to know how I make 1%. Details, please. Colonel, you ready? You got paper and pencil? Colonel, better yet, here you go. You didn't know this because you're new here. The screen right here behind me is live on YouTube. You can go into the other room, break out the big screen TV. Where was this guy when we were in school? I was probably in school too. I'm not in for the dividend. I'm in it for the future. I was just giving you the ticker symbol when you were looking for it. Okay, thank you very much. All right, so, Colonel, let's find a stock that I actually like. Okay, one that actually makes sense. Now, we're going to take a look at U.S. Steel. Okay, I'm sure you know who U.S. Steel is. Dale Carnegie started it back in the 1800s and it ran into one of the biggest steel conglomerates. All right, anyway, so here's how I get the 1%, Colonel. You ready? I look for, number one, Dividend King, Dividend Aristocrat, Dividend Champion, Dividend Contender, any company that is consistently profitable and has weekly options. Okay, that's the criteria. U.S. Steel, they've been in business for over 100 years. They do consistently increase their dividend, which means they're sharing their profits more and more with me. So, today, we ended up at 33.11. That's what I can buy U.S. Steel at tomorrow. If you don't know how to read all this information, here we go. Get rid of that. This is just the information on the stock. The open price of the day, the high, the low, how many shares were traded, what is the current bid, what is the current ask, and what was the last trade. This here is the option chain. Now, what is the option chain? Orlando wants to take a look at key. Hold that thought, Orlando. I'm going to write it down. The option chain, basically you get your calls and your puts. An option gives you the rights but not the obligations. That's the call options. The put options, you get to be obligated. You can force somebody to do something. All right, but let's stick with the call options because they're easier and they're safer and they're easier to understand. All right, so if I buy a U.S. Steel first thing tomorrow morning, the current price is $33.11. Okay? Now, let's say hypothetically speaking, I want to know exactly what my profit is on a safe, predictable trade. Simplest trade that I know of is the covered call, where you buy the stock and you sell somebody else the rights to buy it from you at the same price. Let me give you a quick little example. Let's say, hypothetically speaking, in your backyard you have an old piece of crap car. Let's say it's an 87 Camaro. You take that car, you push it out in the front lawn, you slap a for sale sign on it. Let's say it's $1,000. Okay? Joe, down the street, stops by and says, hey, I like your car. Let me give you $100. Hold it for me until Friday. If I come back on Friday, I will give you an additional $1,000 for the car. The 100 is just for you to hold it. And if I come back, I will give you the rest of the money. I will take the car. Okay? However, if I do not come back, you keep the $100. Next week, sell it to someone else. Same thing. You're buying a stock. This is the price you're paying for it. The covered call is you're selling or you're giving somebody the option to buy it from you for a certain price by a certain day. What do I mean? Well, it's currently at 31.11. The strike price is the predetermined agreed price that I'm going to sell to someone else for. So let's say Tommy wants to buy it from me. Great. I will buy it at 33.11. I will sell it to you at 33. Great. The premium you pay me for that privilege, which means all the stocks that I buy, I take and I just put it into a holding account, and it just sits there. And when Friday comes, if it's above 33, you come back and give me the rest of the money. If it's below 33, well, I keep the money you just gave me, and I keep the stocks, and I get to do it again next week. Okay? So, if I buy it tomorrow, 33.11, the closest strike price is going to be the 33. Right there. Now, the 33 just so happens to be selling for 70 cents a share. Now, 70 cents a share is more than 2% of the stock price. Okay, so I'm looking for a return on my money. So what am I paying for the stock price? What is 1%? Well, 1% of $33 is 33 cents. Okay, it's 1%. But I'm getting 70 cents. But here's the thing. Look at the date. January 3rd, 2025. It's only one day. I'm getting 2% for one day. That's crazy. Let's go take a look at 1 week. So 1 week would be 10 January, next Friday. So next Friday, the 33 is going for, am I reading that right? 247? Do you realize what 247 is on a $33 stock? How many times does 33 cents go into 247? 6 times, 7 times? 7 times maybe 8? That's a 7 or 8% return for 1 week. So what's going to happen? Well, if the stock goes above 33, whoever bought that option, well, they can buy that stock from me at 33. So if it jumps up to 45, okay, whoever bought the option at 33 still has the right to buy it from me at 33. So do I really care if the stock goes up? No, I don't, because I'm not looking for the capital appreciation. I'm looking for the premium. And if the premium's more than 1%, well, I'm making more than 1%. I'm buying a company that I know, US Steel, at the current price, $33.11. I'm selling it to somebody else for the exact same price I just paid for it, 33. All right, I'm losing 11 cents. All right, buy it for 33.11. I sell it for 33. I'm losing 11 cents. Take the 11 cents off of the 247. So instead of walking away with a 247 profit, I'm walking away with a 236 profit. Well, 236 is still more than 7% for 1 week. So that's how I get the 1% kernel. I look for a good company. I check and make sure the timing is right. Okay, the high is there, the low is here. What's the last 30 days telling me? Well, the last 30 days are telling me this. Take a look. 30 days ago, we're way up here. Here's the bottom just recently. But now it's going to the upside. Just how fast is it going to go up? Well, I really honestly don't care how fast it goes up. My main concern, if I buy it at 33 and I sell the 33s, is it going to be above 33 come Friday? Well, 33 is right here, and this is where it is, right here. And it's bouncing off of this bottom. Here's the high, here's the bottom. Bouncing off the bottom. What usually happens at a bottom? Well, people stop buying because they think it's cheap. And they get to a certain height where people say, wait a second, I bought it at 34, now it's at 42. Well, I'm going to take that profit. My profit, 1%. How easy it's to get 1%? Well, look, here's the bottom, 30. Now it jumped up to 34. That's over 10%. I'm only looking for 1. Simple, safe, predictable, consistent. That's what I'm looking for. So, Colonel, I hope that explained it to you. Matthew, U.S. Steel takeover big is pending. Yep, I got that. This is causing a huge premium. Yep, I got that also. being in the right place at the right time. Now, do I like US Steel? Well, yes, I do. Even if they took all their little marbles and left the sandbox, I still like US Steel. They still have been in business for over 100 years. They're in the limelight now because of the buyout. So if the buyout doesn't go through, they're going to keep making steel because that's what they do. All right? Now, I'm pretty sure the guys on the assembly line, they're not standing there on their toes all excited. Hey, we got a buyout. We got a buyout coming along. What's going to happen? What's going to happen? No, they're not. They're going to concentrate on their daily work. That's what workers do. They concentrate on their daily work. All right, hopefully that explains everything. Ray Del Rey, holy shit, I haven't seen you in a while. Yo, 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 W, what's happening? All right, let's keep on moving with more questions. All righty, all righty, all righty. Yo, 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 there we go. Thank you for answering. Alice, you're welcome. Do you have a course or your own books do you recommend? Yeah, actually, believe it or not, I've written 14 books. Book number 14 I finished back in February, and I still haven't put it online yet. But guess what? I am going to put it online hopefully this weekend. Wow, that explanation you just gave was great. Well, double jolly good, thanks. You're relatively new here because I usually have to do that explanation a few times a week. But anyway, TikTok, is Sun in the same boat as ET? Well, let's take a look. Now, Energy Transfer, they've been in business for longer than Sun, I believe. Don't get me wrong, because Sun is a no, because it's a monthly. Okay, so I don't do monthly, so I really couldn't tell you too much on that one. So let's keep on keeping on. Andrea wants to take a look at Siri. Now, just to let you know, Siri was not originally on my list. Okay? But Siri was on Warren Buffett's list. That's why I look at it. So there are some traders out there that I do, bend the rules a little bit. Because I like looking over their shoulders. Like Warren Buffett, yeah, I'll look over his shoulder, see what he's trading. If it's good enough for Warren, hey, it's good enough for me. I know, it's kind of cheating, ain't it? All right, so here's Siri right here. The high is 55, and the bottom is 20. Now that's a big pill to swallow. The low of the year is 20, the high of the year is 50. That's more than a 50% drop going from the high to the low. Is it worth it? Well, let's find out. I'm not the type to buy it and hold on to it for a long period of time. I want to hold on to it for 5 to 10 days. ET is not tradable. Yeah, I don't like it. You can trade it because we did trade it a couple of times last year, but when it goes against you, you'll find you're not getting anything. And don't get it wrong. Stocks will go down. Look at this. It went down, it went up. It went down, it went up. It went down, it went up. That's all they do. So if you're following it closely, you get a good idea of what it's going to do. Andre, you missed Walgreens. Just for you, I might do it again. All right, Siri. Let's take a look at the last 30 days, because this is what mainly I want to see, or the last 90 days. See, the last 90 days will give you a good idea of what the last 3 months were. Now, that's weird. What the heck is that? Okay, no, I do not like the progress, because I liked Windows 95. I really did. And then they came out with Windows 97 and Windows 98. And it's like, no, I don't like these. I want my Windows 95. Yeah, all right, anyway. The last 90 days, we're at 23. She shoots on up, pulls back, shoots on up again, drops, back up, back down. It's the classic movement. Look, down, up, down, up, down, up, down, up. You just got to follow it, okay? Follow the trend. The stock will continue to go up until it stops. Weird, I know. And it will go down until it stops. That's all there is to it, If you're looking for big movements, yeah, you might miss one. All right, so let's keep on looking. Last 30 days. Here we go. 30 days ago, here was our high, just above 29. She drops just below 20. Shoots up, now slowly declining again. All right, so it's slowly declining. Is that something you want to jump into? Or do you want to wait to find a bottom and then 3 days to the upside? because I like 2 days, 2 to 3 days to the upside to show me where the turnaround is. All right? So that Siri just doesn't look that great. Tony wants to look at Carnival Cruise Line. Now, didn't we think Carnival Cruise Line stopped paying dividends a while ago? Hold on. Let's go to Yahoo Finance to figure that one out. Now, I would suggest you all have a link or a quick go-to financial website, because when you're going to buy something, it's always good to know what you're buying. You know, is it a good company? Are they consistent with their profits? What does the volume look like? What does the yield look like? Lots of unanswered questions. Okay, so I use Yahoo Finance because I know where everything is. So yeah, this is why we weren't doing Carnival Cruise Line. There are no dividends in the selected time frame. Now, if you like Carnival Cruise Line, fine. If that works for you, I have certain rules and I try not to go against them. Okay. Danny, is there a downside to making 110 call tonight or tomorrow? Oh no, because January 10th is next Friday. You don't really want to do January 3rd because that's tomorrow, because you're looking for the time value. It depends on what your goal is. Here, my goal is the safe 1% trade. Well, I'm selling time is what I'm selling. See, if I buy the stock at the current price, 25 bucks, and I sell it to someone else for 25 bucks, I want my 1%. Well, great. What has to happen in order for me to be profitable? Well, the stock is going to stay exactly where it is. You know, it's at 25.01, or go higher. So what am I betting? I'm betting between Monday morning, which is when I like to do my trades, and Friday afternoon, the stock will stay exactly where it is, 25, or go higher. That's what I'm betting. So I always like to know, where's the momentum going? Now look at the momentum here. Here's your high and here's your low. Well, where's the momentum? It's going to the downside. Okay, but always, 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 on the downside, eventually you will find a bottom, because the stock goes down to a point where investors say, holy cow, I can't believe this is this price, I'm going to jump on it. So we're all sitting there watching for that first person to say, wait a second, that's pretty damn low, I'm going to jump in. And as soon as they do, we all pile on. What happens? The stock price goes up. And then I'll go to a certain point, I made enough profits, I'm out of here, and then the whole thing starts over and over again. Because if you pull back and look at the whole year picture, what did it do? Take a close look. Okay, it went up, it went down, up, 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 down. That's all it does. And if you're following it on a daily basis, which it is your money and it doesn't take that long, let me show you quickly, all right? See, here's the chart, here's the high, here's the low, here's where it was, here's where it is. Great. What happened today? Not that difficult. Grab your mouse, left click, drag right. There you go, last 30 days, last couple of weeks. This is what happened today, right there. This was yesterday, this was the day before. She went down, she went up. There's the high. Profit taken, it came down. It got to the bottom right here. Now it's going back up again. It's actually that easy. Okay, adults have a tendency to make it more complicated. Number one, find a good company. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list, right there. It's over 300 companies. Now, I told you earlier, we looked earlier this week. There are, at this moment in time, or last we checked, 9,848 companies that you can invest in. So how do you choose? Well, I choose very easily. 2 criteria. Number one, 20 years or more of increased dividend payments to the shareholders. That's a big one, okay? Out of all those companies, over 9,800 companies, that's a big one. Who's profitable for more than 20 years? That's where I want to put my money. Number two, weekly options. Well, that just cut the list in half, because there was a big chunk of companies that are consistently profitable for more than 20 years. But not all of them have weekly options. Now, I don't want monthly options because I have to stare at the computer to try to figure out where's it going next. I don't want to do that. I'm a lazy trader. Isn't that weird? I'm lazy. Okay, I can take a quick look. Here's the high, here's the low. Look at the movement. Not that difficult. Okay, what am I buying at? 25. What's the 25 going for? Well, next week's 25 is going for 43 cents. That's more than 1.5% for a week. Well, number one, it's Carnival Cruise Line. I know who they are. Number two, it's like almost a perfect time to buy. Almost. And it's paying out nicely. So the questions you need to ask yourself, you ready? Question number one, does it make sense? Question number two, do I like Carnival Cruise Line? Thanks, James. Number three, do I like Carnival Cruise Line at this current price? Number four, here's a big one too. Am I willing to buy and hold on to Carnival Cruise Line for however long it takes, knowing, hold on, we got to pull this back a little bit so you get to know what the knowing is. Isn't that weird? Okay. Knowing that the high of the year is 27 and the low of the year is right around 13. That is a 50% increase. Wait a minute, that's a 100% increase. So we're going from 13 to 27, that's a 100% increase. But going from 27 down to 14, that's a 50% decrease. So if the high of the year is there and the low of the year is there, knowing that the price can fluctuate up to 50%, are you still wanting to buy it? Are you still wanting to hold on to it? Those are the big questions. Because after all, nobody has more interest in your money than you. So you are the one. Say, all right, I'll take the responsibility. I'll put the time in. Because it's not free. You do have to put some time in. Okay? You get up in the morning, an extra 5 minutes. Go take a look at your stocks. Well, where did Carnival Cruise Line end today? Well, okay. Well, I bought it here. Now it's here. Okay, I understand. It doesn't take that long. Okay? High, low, where was it? Where is it? Where is it going? Up, down, now it's going back up again. It's not that difficult. All right, so Simone is in the house. Now, Alcon, you're new here, so I might let you slide with you asking me about O. Now, O is O Realty. Now, they are a monthly optionable stock, so right off the bat, that's a big fat no. But considering you're new here, I'm going to pick on you just for a little bit. Okay, here we go. I'm going to take a look at O. Number one, O is a monthly. I don't do monthlies because the numbers just don't work. But wait, hold on. A lot of people ask me about O Realty. It gets worse. It does. Believe me. Hold on one second. Oh my goodness, that's so much better. Getting old is no fun. Golden years are great for one section. One part of your life, it's great. Another part, not so glamorous. Okay. Oh, Realty, monthly, no. Numbers never work out. Two, very challenging to figure out. Well, here's 30 days. Great, look at it. Now tell me where it's going to be in another 30 days. I don't like the monthlies. Too difficult to figure out where it's going next. But wait, hold on. It gets worse. It does. Now, remember what I said. I like companies that are consistently profitable. So, you get a couple of ways to figure out profitability with a company. Number one, you can read all the quarterly reports and all the annual reports and all that kind of nice, neat, fun stuff. Have at it. Have fun. Not me. Like I said earlier, I'm a lazy trader. I look directly at the dividends because a dividend is a portion of the profits the company pays to the investors. That's us, we're the investors. So if the company's consistently profitable, the dividends will increase. All right, so just work that equation backwards. If the dividends consistently increase, well, more than likely they're consistently profitable. Simple. I just look at the consistency of increased dividends. And there's somebody that takes care of that for me. Actually, there's a bunch of people that actually look what companies have paid a dividend for more than 5 decades, consistently increasing. It's called the Dividend Kings list. And there's a couple of people that keep an eye on that list. Because think about it. If they consistently profitable, KeyBank is on that list somewhere. I don't think it's a Dividend King, but I think it's an aristocrat or something. But it is on my list. Okay, hold on. I'll write it down. Oh, you already written down Key. So if the dividends keep increasing, great. That's what I want. Okay, what is the name of the software application you have on your screen? All right, wait a second. That is Think or Swim. It's owned by Charles Schwab. Okay, so let's take a look at O Realty. Okay, remember I told you, hold on, it gets worse? Well, here we go. You ready? Now, I want to take a look at all the dividends. Now, Yahoo Finance allows me to take a look at every single dividend that this company has paid out. So let's take a gander, all right? And you might not like what you find out, because like I said, hold on, it gets worse. 1998. Let's just go to 2000, all right? Because we don't want to go back too far. So in 2000, Alcon, you ready? In 2000, O Realty was paying 9 cents. 2001, O Realty was paying 9 cents. That's 2 years in a row. In 2002, O Realty was paying 9 cents. That's 3 years in a row. No increase. Don't make me happy. But wait, it gets worse. 2003. Okay, then they went up to 10 cents. So 3 years, no increase. Okay, so 2003, 10 cents. 2004, 10 cents. Okay, 2004, they jumped up to 11 halfway through. So there's 11. 2004, 2005, 11. 2006, they jumped up to 12. 2007, they're at 13. 2008, they're at 14. 2009, they're at 14. 2010, they're at 14. 2011, they're at 14. 2012, they're at 14. Okay, so 3 years, no increases. Okay, they increased 3 years. 4 years, no increases. There's no consistency with this. But hold on. Believe it or not, it gets worse. So it goes to 15, 2012. Then it goes to 18, 2013, 18, 2014, 18, 2015, 18. Okay, 3 years, no increases. Okay, 2016, they're at 19. 17, they're at 20. Then they go to 21. Then 2019, 22. Then 23. And then they've been at 25. All right, now they're at 26. All right, so they don't increase every single year. Okay, but hold on. Believe it or not, it gets worse. You probably think to yourself, how could it possibly get worse? It does. So the stock definitely goes up when the dividend pays. No. The dividend is a portion of the profits. Remember, companies are in business to make a profit. Okay, there's only two kinds of companies. When it comes to a profit, one company will take all the profits and put it back into the company for capital growth, which means the stock goes higher and higher and higher. And the company gets bigger and bigger and bigger. The flip side, companies that take the profits and they share it with the investors. The very first dividend stock was specifically designed because the company needed to raise a lot of money. So how do you raise a lot of money? Well, you make outlandish promises. So the promise that the company made was, you invest in our company and we will share our profits with you. Okay? So the dividend is a portion of the profits, and the company consistently more profitable year after year after year, well, the dividends are going to increase. Okay? It doesn't increase because the dividends go up. No. The dividends go up because they're more profitable. That's what that means. Okay, so as I said, hold on. O is actually going to get worse. Now, we're going to go right to the summary to find out, the do, the dads, and all these kind of nice, neat, fun stuff about O Realty. Here's a number you're not going to like, all right? The current yield, okay? The forward dividend and the yield, which means you're buying the stock at 53 bucks, you're receiving $3.17 profit every single year. And that, my friends, is 5.9% for the year. So I'm showing you a bunch of different companies and how to invest them to gain 1% a week, which is 1% a week is over 50% per year. But you want to put your money into a company that's not consistently profitable, doesn't have weekly options, makes it more challenging to pick a good trade, and it only pays 5.9% per year. So Realty is a no. Okay, that's a no. What the hell are you thinking putting your money there? But I don't tell anybody what to do with it. Okay, you do whatever you want with it. If you like Realty, more power to you. Starbucks. WW wants to take a look at Starbuckies. Now, I do like Starbucks. SBUX. Okay? First thing, always, always, always. Where's the high? Where's the low? Where was it? Where is it? What direction is it going? Look, up, down, up, down, up, down. Now it's going back up again. Not that difficult to see, but that's the 1 year chart. It doesn't give us a good idea of where it's going next. It just gives us an idea of what did it do this year. Next, we want to take a look at the numbers. What am I buying it for? What am I selling? What is my rate of return? Is it going to be a good deal or not? Is it the right time to buy? These are all simple, easy questions. If I'm buying it at 92.69, the closest strike price is going to be the 93. Okay? So the 93 for this week, it's only 1 day left, it's 25 cents. That's not going to work. But it's going for 68 to 102. Well, 93 is in between that. So you can get you 1% out of Starbucks. So the numbers work. Let's take a close look at the chart. Is it the right time? This is the overall picture for the year. You know, high, low, or was it, where is it, what direction is it going? Okay, great. Let's zoom on in, get a better idea of what this baby's doing. Here's the last 90 days. We're still looking at the same thing. High, low, where was it, where is it, what's the direction? Up, down, up. Well, that's easy to see. That is simple. Up, down, up. Well, that's easy. Now let's go into the last 30 days, because the 30 days always paints a different picture. Well, not in this instance. 30 days ago was a 30-day high. Dropped. Now she's shooting back up again. That's what I'm looking for. I've heard of Starbucks. I know who they are. I've been there. Okay, I once in a while frequent it. Once in a while. Okay, I'm not really a coffee drinker. It's weird. So 92.69 is 93. 30-day high. Here's the bottom. It's definitely moving to the upside. Now the time to answer those questions. Okay, does it make sense? Do I like Starbucks? Do I like it at this price? Am I willing to hold on to it until it hits my target? Well, here's the thing. You buy it, you get a dividend every 90 days. That will increase every single year. So worst case scenario, you're buying a company that you know of, you've heard, you've seen, you saw the commercials, it's been around for a while. Here's the bottom, here was the top. It's definitely going to the upside. That's what it looks like at this moment in time. Where's it going to be in 5 days? Well, hypothetically speaking, in 5 days, hypothetically should be somewhere around 94 to 96 because it's going up in that direction. Is that guaranteed? No, it's not. So let's throw in one more tidbit that might be helpful. That is what's called the seasonality chart. Now, if you've never heard of a seasonality chart, it's basically exactly what you think it is. It's basically exactly what you think it is. Seasonality. Winter, spring, summer, fall. Did you drink coffee? No, never really did drink coffee. The only time I drink coffee is if I need to stay awake. If I'm going to drive from here to Boston, you know, it's about a 26-hour drive. Yeah, I'll drink coffee or Coca-Cola or something with caffeine in it. For the most part, no. I get way too much energy as it is. Can you imagine me on coffee? It's like, No, caffeine and me don't mix very well. All right, so the blue line represents the movement for this year. Why is it still up here is beyond me. Okay, we should have no blue whatsoever because this is this year, which means this year. Oh, I like that little hat thing. That's cool. So The blue line, this was for 2024. Okay, we don't have anything for 2025 yet, so that's probably why 2024 is still up there. But down here, the red line is 10 years worth of average movement. So that is 2014, 2015, 2016, 17, 18, 19, 20, on top of one another to figure out what does a stock normally do this time of year. Well, the first quarter, which is January through April, only January, February, March. Yeah, January through the end of March, right here, basically doesn't do a whole heck of a lot of anything. Okay, that's basically the first quarter. Just going sideways, a very, very slight tilt to the downside. Very slight. Okay, no big movements in the quarter, but that's a seasonality chart. What does it normally do? Normally it just goes flat, sideways. So those are the 4 charts that I like to look at. And once I get to this point, it's like, okay, doesn't look like it's going anywhere anytime soon. So as long as I buy it here, the 92.76, and I sell the 93s, well, I'm getting just about 1%. Now, here's something you really got to remember if you're going to play this game. The numbers at this moment in time are not moving. That's because the market's not open. When the market's open, these numbers, just like you see in the movies, they flash, they go up, they go down, they go up, they go down, no rhyme or reason. Seriously, no rhyme or reason. It will go from 92.76 to 92.80 to 93 to 97. Then it'll drop back down to 91, back down to 92. Up, down, up, down. That's all it does all day long. Okay? So when you're jumping in and you're playing this game, just remember, as these numbers change, make sure that when you buy and then you sell, that you're getting your 1%. Because that's what we're looking for. Well, that's what I'm looking for. So you guys, I don't give advice, so you guys got to figure out what you want to do. Sean, Meta, I don't do Meta. Sorry. They only have, what, 1 year, maybe 2 years of dividends. I'll see them in 18 years. Sorry, there's way too many companies that will give me what I want. How many deltas do you sell at? I don't even pay attention to the delta. When I say the trading strategy is going to be simple, safe, predictable, consistent, and no way to lose, I created it for my 9-year-old daughter. So it had to be simple. Explaining to her the deltas, explaining to her the Black-Scholes standardized pricing method for stock options. Yeah, no. It had to be easy. A lot of stuff I had to leave out. Definitely see Meta in 18 years. Maybe. You just never know. You never know. Because, believe it or not, I still have my MySpace password saved in my computer. I do. Okay? So, change is inevitable. Is it going to be here? We don't know. That's why I only like companies that have stood the test of time. Let's keep on going. C. McEwen, that's called price fixing, and it's highly illegal. Well, I think you might have to clarify that for me a little bit better, because I'm not 100% sure what you're talking about. Malachi, the Malachi brothers. When are you starting the small account for the grandbaby? That is on the list. As a matter of fact, I keep putting it off, and it's on the list for this year. Johnson & Johnson mentioned their dividend. Yes, they did. But Johnson & Johnson, currently at 144.73. The 145s are going for 90 cents to $1, not 1%. So it's going to be a no. So, C. McCowan, I'd like to know specifically what you're talking about, because I don't like somebody having a bad taste in their mouth, because it doesn't sound like you're happy. Howdy, how are you today? Okay, 2-Ton Tony. What's happening, 2-Ton Tony? Alice, do covered calls have to be purchased in groups of 100, or is that something else? Kind of yes, kind of no. Okay, you can do one covered call. However, one covered call consists of stocks and options. So you have to have 100 shares of the stock to do one contract. So when you're looking at Johnson and Johnson, 100 shares is like $14,000. But if you're doing Ford, it's only $1,000. Big difference. Okay, but 1% is 1%, no matter which way you look at it, because they have stocks that are $2, $3, $4 a share, and they have stocks that are $5, $6, $900 a share. Is Campbell Soup in the 1% range? I don't think so. CPB. Okay, Campbell Soup currently at 42.48. So the 43s going for 10 cents to 25 cents. So no, they're not there. All right, Dr. Mead, hello, user 5370. What about if the X drops $2 and you only get 70 cents? Well, I gotta go back to where we were with that question. All right, I have to, okay, so I'm gonna apologize now, okay, because you guys are on TikTok, so you're seeing the questions as they pop up. They're going really fast, but on my screen, I stop them so that I can read each and every individual question. So if you ask me a question, I will answer it. It might take me a while to get to it, but I will answer every single question. Right now, I have to go back to where was I before it moved on me. Okay, so user 5370, whatever. What if the X drops $2 and you only get 70 cents? Well, I can't answer that question because you're missing a few tidbits of information. If you're talking about X, which is US Steel, if it drops $2, you only get 70 cents. Well, it's still more than 1% of, what do you call it, of the purchase price. Because X at the moment in time is $32. Okay, so if it drops $2, well, that'll be $31. But you're saying you only get 70 cents. Well, that's still more than 1%. Ludwin, what stock are you looking at? At this moment in time, Thawkins, we're looking at US Steel. Awesome, cool beans. TikTok's addicting. Yes, it is. Hey, hi, you still on? Yeah, John. Still on, believe it or not. I've been on since last January. So it's almost been a full year. So here's the thing. I'm trying to make it to a full year. Now, I missed 6 days last year. So I think my count is 359 days in a row. So I'm going to go another 5 or 6 more days, and then it'll be a complete year of videos. Okay, I'm assuming you hope it does not get called away and you just generate the premium. Is the dividend? Okay, the Colonel, I see what you're saying. Now, Colonel, you got 2 questions here. I'm assuming you hope that it does not get called away. Actually, I am hoping that it does get called away, because usually, Colonel, the dividend is not as high as the premium. So let's go, we're gonna use X, all right? Go to Market Watch, and we'll put in X right there. So here's X right there. November 24, that's when they had their dividend. What is the dividend? Well, Colonel, take a look. The dividend is 5 cents. 5 cents, that's all it is. That's horrible. So think of this for a second. If I buy US Steel at 33, I sell it to somebody to buy it from me for the exact same price I just paid for it, 33. Well, the 33 is paying $2.47 a share. Now, they pay a premium every single week. They pay a dividend once every 90 days. So most people are used to buying a stock, holding on to it for years or decades and collecting that 5-cent dividend, okay, that 5-cent dividend every 90 days. But I'm asking you to change your way of thinking. Buy the stock, collect a premium if the numbers are right. Well, in this instance right here at the 33, it's $2.47. Okay? That's a nice return for 1 week. Is Verizon on your radar? CH, yes, Verizon is on my radar. Give me 1 second. I'm still helping out the colonel here. Okay, so dividend capturing is one thing. That's where you buy the stock before the EX date. Okay, hold it past the date of record, capture the dividend, and then sell it after the EX date or the date of record for a profit or for the exact same amount of money, collecting the dividend. Well, in this instance, US Steel has a 5-cent dividend. Why would I want to collect a 5-cent dividend when I can collect a $2.47 premium? So check this out. What if I buy it at 33 and then I turn around and sell it at 31? Well, at 31, I'll be able to collect 237. You do all the fun math, I'm still making more than 1%. But it gives me a lot, thank you, CH, gives me a lot more room to roam. Because if I'm buying it here, 33, I'm selling the 31s. So as long as the stock stayed above 31, before Friday, I get all my money back and I get the return of the premium, which in this case is way over, 4 or 5%. Okay, no cap. Sir, what do you think of Nvidia? Hell no. How's that? Hell no. Reason being, Nvidia is like 130 bucks. The dividend on Nvidia is 1 penny. The book value of Nvidia is $1.74. That means if Nvidia is ordered by the Supreme Court to divest and pay off all their investors, you get $1.74 for that 130 whatever dollar stock you just paid. And the dividend, woohoo, 1 penny. Yeah, no thanks. I don't like Nvidia. The numbers are horrible. Okay, Steen Olson. What about Anderson stock? You actually got to give me this ticker symbol. Ouch. You see that one, CH? Ouch. Yeah, I don't like it. Interesting. Did you like that? Think about it. Before you ever buy anything, seriously, look at all the numbers. Okay, just because the stock keeps going up in price doesn't mean it's a good buy. Because yeah, Nvidia is going up, great, but what is it actually worth? What is the recourse? What is the downfall? What is the risk? Well, the risk is $1.74. It's a $1.74 stock. 2, the dividends are only 1 penny. There's so many other different companies that have a better numbers than that. Hey, if you want one of those 95s, I'll install it on you. Believe it or not, somewhere I have saved my Windows 95 hard drive. So it's still pictures of my children when they were little in 95, which I don't know where it is, but it's somewhere. Okay, so let's continue. Zahid. Hey, James, can I roll a covered call in the same week? You can. I'll give you, for instance, hypothetically speaking, if you buy US Steel 33, okay, and then the stock drops down to 20, you can roll the 33 into like a 27, 26, drop and pick up a little bit more money. All depends on the movement, though. What do you think of Key? Okay, Orlando, I haven't gotten a Key yet. Let's bring it up right now because you asked so nicely. Okay, so here's Key Bank. Now, when I look at any stock, I always look at the same thing over and over and over. It's kind of like a ritual. It's like when you get dressed in the morning, you put your right leg in, then you put your left leg in. Is your daughter still practicing with this? Nope. She don't do it anymore, okay? Okay, awesome. Okay, from the time she was 9, right up to the time she decided she didn't want to trade anymore, it was awesome. Because at age 12, 13, they change. They do. It's like, get away. I didn't do it. Anyway, so here we go. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, now what is it doing? Well, that's Key Bank. Okay, this is last year. This is the history. This is what it's already did. Great, well, what's it doing now? That's right here. I want to zoom in, take a look at that. Is it a good candidate for this week? Let's go find out. The high, 20 bucks. That was a couple of weeks ago. The low, 12.94. So that's a big jump between 12.94. Does January set a trend for the year? Not really. Because everything's different. It's just one quarter. First quarter, second quarter, third quarter. It depends on what you're looking at. All right, let's keep on going. So currently the price, $17.32. The 17s are going for 23 to 32. That's over 1%, so that's a yes. Michael, silly question. Does anyone know how to direct message James? It is on TikTok and or YouTube. It's my bedtime. All right, cool beans. The easiest way to DM me is to go to TikTok and do it from there. I actually look at that account 2 to 3 times a week, 2 or 3 times a day. YouTube, you're lucky if I look at that thing once a week. Facebook, you're lucky if I look at that thing once a month. You just got to go where the attention is because everybody's there. Weird. All right. Anyway, so if I'm buying it $17.32, I'm selling the 17s or the 17.50 to 17s because they have some value to them. Actually, no, they don't. Because if I buy it at $17.32 and I sell the 17s, well, I'm losing 32 cents. You take the 32 cents out of this, you ain't getting nothing. So the numbers just don't work for KeyBank. Sorry. It always comes down to a numbers game. Okay, it's your money. You want to put it in the safest place possible. So why would you put it in a company that's not consistently profitable? Now, Key's not bad, but look at where she is. The high was there. Now she's pulling back. Is it a good time to jump in? Well, apparently, it doesn't look like it. Okay, so here's the last 30 days. Here's the high. Here's the bottom. She jumps up, pulls back up, now back down again. Doesn't look like it. So if you always consistent look at the numbers, what is it telling you? 30 days goes to high. Here's your bottom. She tried to retrace, came back up, now back down again. So keep watching it because eventually there will be a bottom where she turns around and then goes back up. That's what you want to look for if you like the company. And that always comes down to that. Do I like this company? Do I understand them? Is it something I want to hold on to? They're very important questions. Okay. Billy Jim Bibby. Hey, James. So if it looks like the stock is not hitting the strike price, you roll it or let it expire. Well, Jim, it always depends. Where did I jump in? What did I buy it for? What strike price did I sell? Where is it at now? So, Jim, that question is a 3 o'clock Friday afternoon question. We cannot answer the questions of Friday afternoon with the information we possess right now. Because tomorrow morning we have no idea what's going to open. How is it going to react? Compared to, because when you buy a stock, whatever you buy it for, that number never, ever, ever changes. It always stays the same. What does change is the current price. Because the current price is constantly rolling. It's kind of like a river. Oh, how the river flows. Which way is it going? Nobody knows. Okay, it goes down, it goes up. It goes down, it goes up. It goes down, it goes up. Well, at this moment in time, this one is in a downtrend. Okay, it looked like we had a turnaround here, but it didn't. It's still going down. Okay? So once you figure out where is it flowing, well, what did you buy it for? Where's it currently at now? Now, at 3 o'clock on Friday, well, that's a good time to finally make your final decisions for your week. You know, is that your final answer? Well, it better be, because at 4 o'clock on Friday afternoon, you're out of choices. Whatever the dice rolls is whatever the dice rolls. All right. Love to hike. Dude, I haven't heard from you in a while. Okay. Hello from Jennifer. Say, what do you mean? Okay, I don't remember that question. Can you... Oh, okay, Gil. You can do it whenever you want, and if the numbers make sense. Well, that sounds like something I would have said. Yeah, if the numbers work. it, I let it expire and use the money for new stocks next week. Well, that makes sense, depending on, of course, where you bought in, what you sold, all those kind of nice, neat, fun stuff. Joseph Grender, how are you doing today? Welcome to the show. Thank you for explaining this. Emily, you're welcome. I hope to hear more from you. Look, Bryce, I just witnessed a grand, solid green light stopped for a moment up to the sky and suddenly vanished going south. Cool beans. Don't know what that has to do with the topic at hand, but alrighty. All right, what other questions we got? Hold on. Maddie, damn, I hardly have any patience for this. Well, if you don't have the patience, then you best give it to someone else and hope they give you a good deal. It's your future. It's worth learning. Thanks, love to hike. Dude, I haven't heard from you in a while. You should give me a buzz. Chat. When is the recession hitting? You keep talking that way. All right, here's the funny thing about recessions. A lot of people tend to forget this. If you ask the question, where is the next recession? Well, now it's going to force me to ask that question to someone else. And then as soon as you mention something and people start talking about it and people start thinking about it, well, guess what you think is going to happen? Okay, as a man thinketh, so is he. So the more you look for a recession, the sooner it's going to get here. Okay? Okay, you will find whatever you look for. Because if you think of it this way, you take a look at the stock market from the beginning of the century to 1900 to where we are now. There has been a recession, a pullback, a correction, whatever you want to call it, every decade. Okay? Now, we already had one this decade. Does that mean we can't have a second one? Doesn't mean that at all. We could, but are we going to? If that's what you focus on, you might lose opportunities. And that's another reason why I only do companies that have been around for a long period of time. Because if you look at a company that's been around for 100 years, they've seen a lot of shit. Okay? And they're still paying dividends. Those are the ones I like. How do we know if it's a weekly or a monthly? I'm going to pretend you didn't say that. Seriously. How can you tell? Well, 3 January, that's this Friday. 10 January, that's next Friday. 17 January, that's 3 Fridays away. 24 January, well, that's 5 Fridays away. Okay, those are weeklies. January, February, March, June, September, January. Those are monthlies. Basically, the only way you can tell, when you bring it up and when you look at the chart and you don't see any weeklies, what's a weekly? Well, it's, the 3rd. All right, hold on. Okay? The 3rd of January, the 10th of January, the 17th of January, the 24th of January, the 31st of January. Well, that's 5 right in the month of January. January. Those are weeklies. Weeklies, monthlies. Big difference between the two because one pays better than the other. No cap. What do you think about some steel exchange stock? You're going to have to give me a ticker symbol, dude. I can't play that game. Sorry. There's, 9,800 different companies, and you want to say, what do I think about? You actually have to give me a company to look at to see the numbers. Do you have a strategy or buying low, selling high on the same company? to reinvest back into the company, lower entry, increase share count. Not sure if I had that right. Absolutely wrong. Not what I'm looking for at all, dude. Okay? I'm doing covered calls against good quality dividend stocks at the right time. It's a timing thing. Okay, just before the dividend is paid out, the stock has a tendency to increase. So if I take all my stock picks, and put them into a calendar, well, now the calendar is going to tell me, well, that's just November. Let's go to January. Okay? January 25. It's going to tell me, well, this week we have these companies that are paying a dividend. This Friday, tomorrow, American Express, Bristol Myers Squibb, Cisco. Today, Cardinal Health. 2 days ago, Nucor, Mandalese, Fifth Third Bank, John Deere, and U.S. Bank. These are the companies paying out a dividend. These are the companies on my list that are paying out dividends. So I pick a good company, one that's consistently profitable, and I go from there. When are they having their dividend payment? Because the dividend payment is an indicator that tells me when the stock usually goes up in price. Because the stocks move for two reasons, and two reasons only. One is an unknown reason, which death of a salesman, natural disaster, hurricane, tornado, flood, those type of things. Terrorist attacks, things you cannot plan for. Those are unknown reasons. The only thing you do to those is react. You can't plan for those. But what you can plan for, earnings reports, dividend payments, stock splits, seasonality. Well, what do I mean by seasonality? Well, certain stocks react differently to different time of year. Why does Weight Watcher stock go up in the first couple weeks of the year? Think about it. Why does Hershey stocks go up in the first week of February? Think about it. Okay, Valentine's Day, Easter, right around the corner. Certain stocks react predictably certain times of year. That's called seasonality. So if you can plan. Now, with earnings reports, I've seen earnings. Hold on, let's pull them up. There you go. Earnings reports are in blue and purple. Greens are the dividends. Earnings reports. I've seen a positive earnings report where the stock went down. On the flip side, I've seen a negative earnings report where the stock goes up. But when it comes to dividends, the dividend, stocks have a tendency to go up in value just before the dividend date. So knowing that, okay, if I'm looking at JP Morgan, Comcast, MasterCard, General Mills, AT&T, and Verizon, if I'm looking at all those stocks this week, and I'm only picking up two or one, because I don't buy a whole bunch of stocks every week. I buy one or two, that's about it. Which calendars are using many things? All right, you're welcome. CH, investors move in the dividend period makes sense. Thank you again. Makes sense. Okay, so if I'm looking at a stock just before the dividend date and the stock usually goes up, and I do a trading strategy that's simple, looks for 1%, what is the best equity mutual fund, sir? I don't do that game. Terribly sorry. Dividend stocks only. So if I'm buying a dividend stock just before the dividend and the stock goes up just before the dividend, I get a simple, safe strategy that is predictable. That's the covered call. There are a lot of trading strategies. As a matter of fact, let's go right here and go to there. When it comes to options, you can buy a single option, buy a call, buy a put, sell a call, sell a put. Those are singles by themselves. Vertical, well, there's a whole bunch of different verticals. You can buy this, sell that. You can sell this, buy that. That's a vertical. That's interchanging one with the other. That's another trading strategy. And then you have the back ratio. That's a fun one. I'm going to sell two of these in order to buy one of those. Well, that's kind of confusing. Yes, it is, but the rate of return is different. Okay, so each one of these trading strategies has its pros and has its cons. The simplest is just to buy. Well, there's a problem with just buying. 80% of all options expire worthless. So why would I want to buy and be in the 20% bracket? If only 20% of the time I'm going to win, why do I want to do that? I want to be a seller. A seller, 80% of the time, you're going to be right. And the times you're not right, well, you can roll it forward and do it again and take that chance of being right 80% of the time again. Well, that's the beauty of the covered call. Okay, so a covered call, I buy the stock, I own the stock. I sell an option, okay, covered call, that allows someone to buy it from me for the same price I just paid, and I get to collect that 1%. 1% every week. That works for me. CH, I heard AT&T had good news, and then something about environmental issue with old lead-clad cables being left on the ground is showing the thorn on them now. Yep, could be. Mikey, you're back again. I like the strategy. Thank you kindly. Lemonade, thank you. All righty. So, Mikey, you want to know if I beat the S&P? Well, Mikey, here's a better question for you. Okay, in the last 15 years, how many times did the S&P beat me? That's a good question. All right. So just to let you know, Mikey, for the past 15 years, the S&P has not beat me yet. All right. I love this hike. I love the hike. Ray Del Rey. No, because if a contract doesn't get exercised, you're now stuck with a monthly gain. Okay, nice. You got that. How many months, years do you hold a stock? The longest I've ever held anything is 9 months. And I do it because I wanted to. Okay? It was Kimberly Clark, 2023. I bought it. The stock dropped into it. It recovered. I finally sold it for profit. Now, I held it for 9 months. So in that 9-month period, I collected 3 dividends and over 30 premiums. Yeah, about 30, someone, I think it was like 32, 33 premiums. So I collect a premium every single week, and I got 3 dividends, and I finally sold it for profit. So I got 5 simple rules. Rule number 1, never buy something you don't understand. You don't understand it, don't buy it. If it doesn't make sense, don't buy it. It's actually that simple. I like Kimberly Clark. Would I buy it again? Yes, I would. Okay? Did I learn something from my mistake last year? Yes, I did. So it all depends on what it is you want to do. Me, I do not hide what I'm looking for. Simple, safe, predictable, consistent. Do you wear that shirt in public? Sometimes yes, sometimes no. And I actually got 8 of these shirts. Red, blue, green, brown, black, charcoal. La, 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 la. Love to hike. Since I started this 9 months ago, my average will be 45% for the year. Dude, that's awesome. Okay. Hello. Uh-oh, I missed a question. Missed a question. Nice. Fundamental analysis or technical analysis the best way? You really cannot beat fundamental analysis. The company is worth what the company is worth. The company brings in what the company brings in. Profits are what they are. Those are the fundamentals. Technical is, all right, it's a high now, it's a low then, double high, a pennant, and it's formed. Those are technical. Which way does it look like it's going? So I like to get the both of them together because you can't fight the trend. Whichever direction it's going, well, that's the direction the river's flowing. That's the direction you should be going until it changes direction. So go with the flow, and when it changes, just make sure you can make the adjustments that you need to in order to stay consistently profitable. All right, Rob, this is awesome. Thank you for your knowledge. Much appreciated. Love learning. Cool beanies. Love the hike. You only started 9 months ago, so you've yet to have a year of trading. Yeah, Mikey, I see that, but he's only been doing it for 9 months, and he's already up 45%. Well, that's definitely beating the S&P, 45%, and he hasn't even done it for a year yet. Okay, so let's keep on going. I've traded many years, just discovered this strategy. Well, thank you, thank you. Lance, TV is way too bright. Yeah, I get that. Until somebody informs me how to create a better viewing with the TV. Because some channels work great, some of them don't. Best Bud, thanks for all the help. You're welcome. Profit sharing, gotta love that one. All right, no nickname, Verizon, huh? VZ, there we go. All right, always, always, always looking for the same thing. The high, the low, where was it, where is it? Look at the movement, up, basically just sideways, a little bit of a peak here, but now we're at 40. A year ago we're at 39, now we're at 40. No big movement at all, but 40.58, the 40.50s are going for 12 to 35, not quite 1%. So as much as you like Verizon, the numbers just don't work. Paramount, now I do like Paramount, was not originally on my list, but it was on Warren Buffett's list. Let's take a look at the numbers. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement, down, up, down, sideways. Now we're here at 10.75. The 11s are going for 2 to 5, not quite 1%. Now don't get me wrong, I have invested in Paramount many times. Dawn, hey man, what are your thoughts on cash secured puts? I love them. But Dawn, I do not teach them here. I only teach one strategy here because I want it to be simple and easy for people to understand. Once you perfect one strategy, great, bring in another one. I mean, don't look at a stock and say, well, I could do this strategy, I can do that strategy, I can do that strategy. Pick one. Pick one, get really good at it, and then go from there. Jeff, how do you scan to find stocks with the highest premium? See, Jeff, you weren't paying attention. I don't scan to find stocks with highest premiums. I scan to find stocks that are consistently profitable. And then I take those stocks and I put them in to a calendar. Okay? The calendar tells me which stocks to look at which week. And the reason I do it that way is because just before, the green dots, those are when they pay their dividends. So if I'm looking at Caterpillar, who's paying their dividend on the 21st, I want to buy it 2 weeks before the 21st on a Monday. The reason why I want to do it on Monday is because I'm doing a covered call. It's a simple strategy. It's simple and it's safe. So if I keep doing that, buy on a Monday at the market open, sell a covered call at the market open, capture that 1%, as long as the stock is in an upward trending fashion and it has its dividend coming up, well, I have all the odds and probabilities in my favor. It's really not that difficult. Look at the calendar. It's easy to read. Okay, January 25th. Here's the 1st. Here's today. Tomorrow, Monday, Tuesday, Wednesday, Thursday, so on and so forth. So what's 2 weeks from today? Well, today, 2 weeks is the 17th. Well, General Dynamics is paying a dividend. Okay, but come Monday, what's paying 2 weeks? Well, Caterpillar, Lowe's, Pfizer, and probably a whole bunch more that haven't been listed yet. So I like Caterpillar. I want to buy it first thing Monday. The dividend for Caterpillar is $1.41. So let's go take a look at Caterpillar. C-A-T. Whoops. Okay, and the current price for Caterpillar is $3.61. So the $3.60 for next week is going for $4.35. So here's an interesting question for you. Do you want to collect the dividend once every 90 days for $1.41, or do you want to buy the stock at what at was it $3.61, sell it to somebody else for basically the same amount of money you just paid for it, and collect a premium that is $4.35. So if you buy the stock at $3.60, you're getting the dividend, $1.60. If you buy the stock for $3.60, sell it to somebody else for $3.60, don't collect the dividend, you're getting $4.35. And they do it every single week. So if I don't sell it for $3.60 this week, well, I'll do it again next week. And what is next week's going for? Well, next week's $3.60 is going for $7.05. Now, of course, when the market opens, all these numbers consistently change. As the days tick away, so do the sands in the hourglass. As the sands in the hourglass go, so are the days of our lives, whatever. So as the days progress, the option value drops because you're getting closer and closer to the expiration date. All right, so we're almost at 11 o'clock. At what strike price do you sell if a purchased stock goes against you? Okay, a person. I want to go as close as I possibly can. I'll give you, for instance, Caterpillar at this moment in time. If I bought Caterpillar a couple of weeks ago at $3.80, now it's down to $3.60. Well, all right, if I bought it at $3.80 a couple of weeks ago, well, today the $3.80 is only going to be worth 15 cents a share. I could sell it at 15 cents a share. I'm bringing in some money, not much. But look how far away it is. The 360, no, the 380 is right here. What are the chances of it going that far? Probably not much. I would probably, me personally, end up doing the 370s and picking up $1.35 rather than the 380s and picking up 15 cents. It all comes down to a risk-reward ratio. What do I think it's going to go? Okay, if it's currently, if I bought it at 380, now it's worth 360. Do I really see it hitting 370 or 375 before it goes to 380? It all depends on the momentum of the stock. Which direction is it going? Where's the best place to put my sell price? So as the stock drops, where do I put it? I don't want to put it at money where all the action is, because there's a probability I could get called out and I could lose money, and I don't like that. One of my rules is never lose money, never sell at a loss. All right, so Donna answered that question. I do like cash secured puts, but I don't teach them here. Do you have your comments off on your post? Alice, I said this earlier. I do read and respond to every single question. They go by so fast, I actually have them stopped on my screen. So as I do them one at a time, I go through all of them. I will go through and answer every single question before the night is over. Okay, that is a promise. Oh, how do you control your mental psychology when you're going to trade? Oh, no cap. That's a burden placed upon everyone. You have to lose enough money for you to decide, I ain't going to do that shit no more. Simple. Okay, I lost 91,000 in 1 week, and I said to myself, oh, I ain't going to do that again. That's just the way it is. Rob, Brian, Nike, NKE, Nike, NKE. Okay, look what Nike did today. That's an interesting move. Okay, she opened up at 76 and she ended up closing at 73. A solid red line. She opened up high and closed lower. All right. I want to show you something quick I just noticed about Nike. Here's your high right here. Here's your low right here on Monday. Sorry, Thursday. And then Friday. bottom, 1 day up. Today it opened higher. So that would have been the second day to the high side. Okay, second day going the upside because it's a higher high. But she started out high and she ended up creating a new 30-day bottom. No nickname, CLF. I'm pretty sure CLF is a no. Okay, Cleveland Cliffs. I think that's like a retirement home or something. CLF. Okay, let's see how well CLF has done with their dividends. Okay, there are no dividends in the time frame selected. So no dividends, no thank you. I have to figure out how to get that thing closer. Do you have XRP? No. Apparently you're new here. I don't do cryptocurrency. Everybody here knows I don't do cryptocurrency. How do you sell the same price you bought it and make a profit? Sensei, I knew someone was going to ask that question sooner or later. Here's how you do it, Sensei. You ready? Let's go to Macy's, because I like Macy's. All right, Macy's at $16.59. Okay, if I buy it at $16.59, that's the purchase price. The bid, what I can sell it for. The ask is what I can buy it for. So if I don't own any and I want to buy some, that is my purchase price. If I walk into the stock market and I want to sell it, well, this is what I'm going to get. $16.46. If I'm going to buy it, it's $16.59. Is what it is. All right. So if I buy it for $16.59 and I sell it for whatever the strike price is, the closest strike price, $16.59 is going to be the $16.50, and it is selling for 76 cents a share. So, Sensei, if I'm buying it for $16.59, selling it for $16.50, I'm losing 9 cents right off the top, right? But I'm collecting 76 cents a share. So if we take the 9 cents out of that, I'm walking away with 66 cents profit. 66 cents profit on a $16.50 stock. Well, that's almost 4%. It all comes down to a numbers game. So if I'm buying it for this price, selling it for that price, this is what I'm collecting. I'm walking away with a 3 or 4% profit, and that is what I'm looking for. Thoughts on SCHD? You're the first one who mentioned it this week, which is kind of unusual. Okay, SCHD, no. The numbers just don't work. Alice, that's awesome. Your daughter must have done pretty well by starting off so young. No, she didn't. She quit when she like 12 because boys and girly things were more important. Is what it is. Because people pay you a premium for the week. That's where you make your money. Love to hike. Gotta love it. Got those answers right there. What's a premium? Oh, shit. I'm going to let you do that one. Silent Samurai, new to trading. Where to start as far as educating? Actually, it is a mental leap first. You have to be ready up here because it's a whole new set of words, whole new set of terminology. You're buying, you're selling, you're selling, you're buying. Okay, there's the market price, there's a limit order. There's a lot of different new terminology that may be confusing. And it's just a time thing. Just the more you do it, the better you get at it. It's actually that simple. Brian Spence, call option premium. Okay, not quite sure what you mean by that, but okay. Club Bed Tom. Hey, James. For how long have you been able to pay close to zero taxes? I think when I got my business manager and she arranged everything for me, and I think that was late 1990s, I think it was. Yeah, I'm pretty sure it was the late 1990s. Love to hike. Sensei, they pay you money, you hold the stock for them at a certain... Okay, that's cool. Someone, Colt 45 said not true. Not true to something. Uh-oh. Oh, wow. I missed all these questions. Holy crap. I'm going to have to go through these questions a little faster. Thanks. Sensei Price started 2 weeks ago. You're up 2%. 2-ton Tony. Way to go, Sensei. Love to hike. So when he says he wants a premium 1% return, that includes $1 for the premium. I'm not quite sure what he means by that. Paul, Rockstar, your method has made me 42% this year. Cool beans, dude. Nice going. I didn't get my Christmas present, dude. No, I'm happy for you. 42%, that's great. Huh? He made, yeah, what was it? Paul over there. Okay. Okay, Sensei. So when he says he wants a premium, a minimum of 1% return, that includes the money for the premium. No, the premium is the 1%. Okay, Sensei, if the stock price is $16.59, 1% of 16.59 is 16. Thanks. So look, 16.59, $16.59. 1% is 16 cents. Well, 16 and a half cents, but you know what I mean. Okay, but the premium for the 1650s are 76 cents, which is way, way over 1%. And that's what I'm looking for. Brian, we already looked at Verizon. West? LOO. What the heck is LOO? Oh, it's a we can't find that symbol. That's what it is. Brian Spence, BAC, Bank of America. Okay, first thing, always, 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 the high and the low. Where is it? What's the direction? That's easy to see. It's going up, a little bit of pullback. What's happening here? Okay, that's the 1 year chart. It looks okay. Let's take a look at the numbers. 44.39, the closest one is going to be the 44.50, right? The closest strike price to 44.39. Do I day trade? No, I do not day trade. Okay? Well, you could say I day trade because I trade in the morning during the day. No, I don't day trade. I buy on Mondays and I just look at it all week long, see what happens on Friday. So 44.39, the closest one is going to be the 44.50, right here. $1.05. Wait, a tenth. 44.50, 50 cents. Well, that's well over 1%. So the question is, do I know who Bank of America is? Do I like them? Do I like them at this price? They're giving me over 1% for the week. If I buy it at 44.39, sell somebody the rights to buy it from me, and they do, I get my 1%. Well, now I have all my cash back, and I get to do the same thing all over again. Alrighty? Let's keep on going. On X, I traded up this morning to the 35s and pocketed $1.50. Secretariat, way to go, dude. Ford is the same price it was, 87. Yeah. It is crazy. Thoughts on Caterpillar? We already looked at Caterpillar a little while ago. Crypto legend, Walmart, WMT. Well, check out Wally World. Here's the high. Here's the low. Look at the movement. Now, normally I would stay away from this because it's so high. But look, it had over a month of pullback, which means a lot of the profit taken is done and over with. So let's take a gander. The last 90 days. Here's the last 90 days. The high, the low. Look at the movement. Up and then down. Well, the last 30 days. Here's the last 30 days. Take a look. 30 days ago, we're at 93. We jumped up to 96, went sideways for a week, and then we dropped down to 89. Now, from 96 to 89, that's a $7 drop. Okay, a little bit less than 10%, but still close enough. I'm looking for 1%. I don't mind 8 or 9 or 10%, but 1% is all I'm looking for. Okay, so here's the high. Bottoms out here, went up, pulled back. Not a good time to jump into Walmart because she is in a downturn. As soon as she finds the bottom, turns around, that would be the time to jump into Walmart. Not today. All right, Crispy, my thoughts on Caterpillar. Didn't we do Caterpillar a little while ago? Okay. Here's the high, here's the low. Look at the movement. Up, down. It's at 359. It's actually in a downturn at the moment. So basically, just sitting on the sidelines, wait for it to find its bottom. Okay. And then go up. Right now, she's just going sideways, looking for that one little key trigger that's going to moment it to go to the upside. Because that's what they do. They go up, and then they go down, and then they go up again. Well, right now, it's getting ready to go back up again, normally. So let's take a look. Have you looked at Altria? I got rid of my Altria today. Okay. Here's the last 30 days for Altria. 30 days ago, we're at 57. Now we jumped up to 58. It's the high of the 30-day period. She drops down. Thursday was the bottom. Friday was up. Today was up. That's 2 days to the upside. To me, that's a perfect opportunity to jump into Altria and take it for a ride. Because here's your top, here's your bottom. What usually happens at a bottom turns around, goes back up again. Usually. Is it guaranteed? No. Nothing's guaranteed except for death and taxes. Okay, Wavy Dave. I don't do Amazon, so don't really know. LTRX. I've never heard of LTRX. And usually, LTRX, if I've never heard of it, it's usually a no. Okay? I've been doing it long enough that when you give me a ticker symbol, I'm pretty good at knowing exactly where it is. Saifu, how are you today? New student. Cool beans. What about Johnson & Johnson? We already did Johnson & Johnson today, and the numbers just don't look good. Okay? J&J. 144.72. So we'll be looking at the 145s. The 145s are going for 91 to 1. Not 1%. Not what I'm looking for. All right? The Fishing Marine, SCHD. Now, we already... AIPI? No. That's not 20 years old. If it's not at least 20 years old, it's definitely going to be a no. Okay, SCHD, that's a no, dude. Seriously? Okay, now we haven't picked on someone. We picked on one person tonight. Let's pick on someone else. Okay, let's pick on this guy. SCHD. No. Okay? Reason being, monthly, January, February, April, July. Those are months, which means I can only do a trade once a month. Now, if I'm averaging 1% for each trade I do, that's only 12% for the year. I'm new to this. Just keep coming back. I'm here every night at 9 p.m. Not on Friday nights and not on Saturday nights. I changed my schedule this year. Every night was just getting a little too much. So, SCHD, monthly, no thank you. The numbers just don't work. Insider trading is rampant, and I don't care what anyone else says. Alrighty, Hap, good to hear it. Thanks for stopping by. Darren, hello, James. Hypothetically, if you were starting with low capital, how would you still make your 1%? All right, Darren, you ready for this? Hold that thought. Now, I'm going to show it to you once real quick. I'm not going to spend a lot of time on it. This here is an EX dividend calendar. It tells you when each and every stock pays its dividend. The little green dots. This is the last day the stock trades before the dividend is paid. If you want to collect the dividend on MasterCard right here, you have to own it before the 9th. Now, knowing when they're going to pay their dividend is very important, and here's the reason why. Most companies you'll see that I do, just before the dividend, the stock will increase, equal or more than the value of the dividend. Okay, so MasterCard, the dividend is 76 cents. Now, if I was going to buy MasterCard, which has its dividend next Thursday, I would buy it 2 weeks before on a Monday. So 2 weeks before would have been the 2nd, the 26th. Okay, the 2nd would have been 1 week. The 26th would have been 2 weeks on a Monday, which would have been the 23rd. So let's take a look at that stock on the 23rd of December. Okay, MasterCard on the 23rd of December, 76 cents. MasterCard, 26th of December, was that the 23rd of December? I'm pretty sure it was the 23rd of December, wasn't it? MasterCard, okay. Yeah, the 23rd of December, okay. '23rd of December. All right, that's 2 weeks before on a Monday. I'm not just picking, I just picked anyone. Okay, so the opening of the day was $5.25, and we're looking for a $1.50 increase. So if the opening of the price is $5.25.83, $1.50 would be $27.33. So $27.33 would be the exit price. Well, the high of the day was $5.29. So I would have been in and out on day one with the dividends equivalents. The 2 weeks before the EX date on a Monday, you take the stock price opening, $5.25.83, and you add the dividend to it. What is the upcoming dividend? The upcoming dividend from MasterCard is 76 cents. Okay, it's really interesting how it usually almost always works. So like Pfizer, I would buy it 2 weeks before on a Monday at the market price, and then I would add 43 cents to that market price, and that would be my exit target, good till cancel, extended time frame. So you buy at the market open, you add the upcoming dividend to it, and that's your exit target. And you usually hit it before the EX date. And if you don't hit it before the EX date, well, you get to collect the dividend, which is 43 cents. So either way, you're still getting that money and you're still increasing slowly. Hopefully that works out for you. How long have you been doing this type of work? About 20 years. Austin, what's happening? What stocks pay dividends? Holy cow. Now, we're going to go to a website called FinViz, Financial Visualizations. It tells you basically how many stocks are available in the stock market. Okay. 9,848. See that number right there? This one right here, 9,848. That's a lot. All right? So, how many pay dividends? Simple. See this little entry right here? Dividend yield. Okay, click on dividend yield. Positive. Okay, positive dividend. How many companies pay a positive dividend? 5,738. Okay, so out of the 9,800 companies, 5,738 actually pay a dividend. How do you pick which one? All right. Let's keep on going. So Campo, a lot of companies pay out a dividend. Dun, 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 dun. Foreskin cheesemaker. I got about 2 pounds of muscle and I can give you probably 30 seconds. Alrighty, there you go. Have at it. Nice to see you. Thanks for stopping by. Colt, not true. I've seen better. Okay, Colt, I'm not 100% sure what it is you're talking about that you've seen better. I've seen better too. I've seen worse. I've seen a lot of stuff in my 20 years of trading. How do you feel about options? I love options. Asim, hello, my friend. Is Walgreens at good position for a covered for 110.25? Well, let's take a gander. I like Walgreens. I actually have some. WBA. Oh, wait a second. We weren't going to look at it anymore because we're running out of time. All right. Well, Walgreens, here's the high and here's the low. We've just been bottom fishing for the past couple of weeks. Is this the bottom? It could be. Okay, Walgreens is 8,700 different stores worldwide. Yeah, they get rid of 25% of them, but they're moving a lot of stuff online, and they have a lot of their own products that they sell. Okay, where do you get your calendar from? Is that common or most platforms? Okay, green pastures, I really don't know what to tell you about that, but I use Think or Swim. Okay, I've been using the same exact platform for over 20 years, close to 20 years. Okay, I found it 20 years ago. I wrote a book 15 years ago about choosing the right trading platform. It's still available on Amazon, but a little outdated. Alice, how could you bought out when trying to balance risk and reward with covered calls? How could you get bought out when trying to balance risk and reward with covered calls? Alice, I'm not 100% sure I understand that question. Okay. Ben, hi. Alice, Green Pastures, I think he makes the calendar himself based on the public dividend payout dates. Alice, not necessarily so. The EX dividend date calendar is, you could go to Google and put in a Google search, EX dividend calendar. There's a whole bunch of different companies that offer something very similar to that. Hey, Neil Crazy Boys, how are you doing today? Let's keep on going with the questions. We've got 9 minutes left. I want to make sure I answer all the questions. 86, good evening, Alice. Uh-oh. Good, thanks. Where do you see CRNT going? Ben, CRNT, why is it I've never heard of that? CRNT. I don't. Here's the reason why. It's a monthly optionable stock. A couple of weeks ago, it was at $2.50. I find it hard to believe that a company that has $2.50 stock, especially if it looks like that, has 20 years of increased dividends. It probably never even make my list. How do you pay zero taxes on profits? Sailing newbie, all depends on how you hold your account. Is it in a trust? Is it in a foundation? Is it in a corporation? Is it in an LLC? Is it in a pension fund? Is it in a Roth IRA? There's lots of different ways you can legally pay zero taxes. That's why I always tell people you need to talk to a tax strategist to figure out how you want to set up your account if you're concerned about taxes. Not something I can help you out with. Okay, ASML. Dude, why would I be looking at ASML? Never heard of it. Okay, SM Holdings, $700 a share. ASML. All right, let's take a look at the dividends that ASML has, all right? So, in 2007, $2.84. Well, that's good. But look what happened in 2008. They cut it from 287 down to 30 cents, 37 cents. And in 2009, they cut it again. And then went to 28 to 54 to 59 to 1187 to 71 to 84 to 81 to 115, 131, 172, 239, 117, all over the place. No. When I say consistent, what I mean by consistent is one, 2, 4, 7, 9, 11, 13, 17, 19. Consistently higher. Okay? TJX plastic. What the heck is TJX? TJX. Okay, here's the high. Here's where it is. It's a little bit of a downturn at the moment. Here's the high. Pulled back. Shot up. Big gap here. This gap is going to fill. So I want 2 days to the upside. Take a look at that. Okay, here's your bottom here. You got 1 day to the upside. One more day to the upside would look nice. Okay, great. What's the number look like? Well, currently it's at 123.21. The 123 is a hell no. 30 cents? No. Hell no. Sorry, the number just doesn't work. What's your picks for tomorrow morning? Okay, no nickname. Tomorrow morning is Friday. Options expire on Friday. I don't buy anything on a Friday. Friday is when I take a look at what I bought on Monday and how are they settling up for the week. Okay, am I rolling it forward? Am I letting it expire? Am I buying it back? What am I doing? I won't know that until 3 o'clock tomorrow afternoon. Let's keep on going to these questions. I was looking for some good AI stocks. Microsoft and IBM seem to be it in America. Okay, I'm going to disagree with you, but all right. Please Health, real estate, ASMI technology, nope. TJX retail, I wouldn't be sure. Is Cash App a good site? Depends. Are you sending money or receiving money? Okay, do they monitor who you send it to? Are you limited to what you can and can't do? I can't really answer that question. It's not something I look at. So that's it for all the questions. You guys are done. So that means I am done for the night. Cash App stocks. Oh, you actually have to give me the ticker symbol so that I can look it up. Might as well do it now because there's nobody else in the chat waiting to go. Sherry, good night, and how are you today? What a lovely day we had today. All right, anyway, so nobody has anything else they want to take a look at, so I'm going to be done for the day. It is Thursday. Okay, excellent, cool. Everybody's good over there, wonderful. So it is Thursday, tomorrow's Friday. Tomorrow, how do I join my class? Don, that's pretty easy. Come up here to the, where it says right here, Dividend Stock Talk. Yeah, you click onto that. That will take you to my website, The 10-Minute Trader. I am still waiting for my answer. Well, Joseph, I understand you're waiting for your answer, but I'm sitting here looking at the screen. I don't see a question. Okay? So if you have a question, Joseph, I could answer it for you, but I don't see a question here on the screen. Okay, so Don, as I was saying, up here at the top left of the screen where it says Dividend Stock Talk, you click on there. That will take you to The 10-Minute Trader right here. Oh, whoops, go up to the top. Okay, The 10-Minute Trader right there. You click on Live Trading, and that takes you over to the website which you signed up at, Dividend Stock Talk. Okay, that's how you join. All right, other than that, you guys have a great night. We will see you again tomorrow. Or, better yet, send me your number and I can give you a buzz and we'll chat. That being said, you guys have a great night. I am out of here.